I'm going to use my first deal as an example to demonstrate you with real numbers how powerful apartment building investing can be. And best of all, I didn't use any of my own money. I'll share some stories of other real life investors in a minute and explain the phenomenon called the law of the first deal. So let me show you exactly how this deal added $40,000 to my net worth every year for 5 years. And I hope in the process, you'll see that you too can do a deal like this. Now here's how I bought the property. It was listed on the MLS by a residential broker. It was brought to me by a wholesaler at the time when I was flipping houses. The purchase price was $530,000. The renovations was about $54,000 or about $4,500 a unit. And the cash needed to close was about $227,000. And I'd raised that from 5 investors in return for a 50-50 split. Now the projected returns were about 15% per year for the investors. I paid myself an acquisition fee of $15,900 at closing when I bought it. Now the business plan was to raise the rents from $595, the average, to $825 over the next 5 years and then sell. So after closing on the property, I renovated the exterior of the building and many of the units. And this allowed me to slowly raise the rents, fill the vacancies, and evict non-paying tenants. After about 5 years, I had it under contract to sell for $850,000. So overall, this building made me a profit of $198,000 in 5 years, including everything, all the fees, distributions, and that's about $40,000 per year. Now, how is it possible to make $40,000 per year with such a small building and with none of my own money in the deal? Hey, and before I break it down for you, by Profit Center, hit that subscribe and notification button. Appreciate it. So here's how it breaks down. Cash flow, number one. Over 5 years, the cash flow was a total of $130,000, and that's after all expenses and my fees. So it's about $181 per unit per month. Now, obviously, as you can expect, cash flow was a little tighter in the first couple of years, and then it picked up, and then the last 3 years, it was a lot more. And during that time, remember, we raised the average rent from $595 to $825. Appreciation. The profit from appreciation was $146,000 after closing and sales costs. Loan reduction or amortization. The loan principal is reduced by $48,000 in 5 years. So the total profit from cash flow, appreciation, and loan reduction was $325,000. Since I had 50% share, my portion of the profits was, of course, half that, about $160,000. Now, what about the $16,000 acquisition fee that I paid at my closing? Oh, I almost forgot. So I paid myself that $16,000 at closing when I bought the building. I also charged an asset management fee while I was owning the building, 1% of the money raised, about $2,300 per year. It wasn't a lot. And then at the end, it was a 1% disposition fee of $8,500 when I sold the building. So all told, my sponsor fees totaled almost $36,000, and that brings my total profit with fees and distributions and all that stuff to just under $200,000, and that's $40,000 per year. Now, this was not rocket science, okay? This was a clear plan in the beginning. Everybody understood what needed to be done, and because it wasn't that complicated, I know that you can do this as well. Now, what did I really do with this property? Okay, so I found a property on MLS. It had some problems, and I felt I could fix it in 3 to 5 years by using a professional management company who actually managed this building like this. So I renovated the property, increased the rent slowly, and reduced the vacancy. Again, it wasn't rocket science. Now, it did require some knowledge. It did require some action. It did take hiring the right property management company. But again, it was not rocket science. Now, if you feel a bit overwhelmed by the numbers, okay, just take a deep breath and make sure you don't miss the main point here. And that is the following. Apartment buildings, even small ones like this, are the single best way to create passive income and long-term wealth so you can do whatever you want in 3 to 5 years. That first deal, my friends, changed my life forever because it set me on the path of financial freedom that I was seeking. And today I'm a full-time entrepreneur, investor, coach, and I'm passionate about helping others become financially free in 1 to 3 years by investing in apartment buildings with a special focus on raising money. And today my partners and I control over $300 million in performing multifamily assets all over the United States. But more importantly, I teach others how to do their first apartment building deal. And through my website, our programs, YouTube video, podcasts, books, we have helped people purchase over 13,000 units. So make sure you hit that subscribe button and notification bell if you want to be financially free in the next 1 to 3 years so you don't miss another piece of this training. So despite all this, okay, all my successes in an apartment building, and that was my first one, but this rocky journey took too long, took 10 years. and cost me too much money. Everything over $1 million. And that's all because of the false beliefs I had about apartments. Most real estate investors never become financial free because they think they can do it with single family houses. But they actually can't. Okay, I've noticed over and over again from my podcasts. They may have started with a single family, but they almost never actually quit their job with single family house. And the thing is that most people think single family houses are a stepping stone, and they dismiss investing in apartments because they think it's an advanced strategy, that they need years of experience and tons of money. As it turns out, you don't need tons of experience, and you don't need tons of money. And it even gets better than that, because not only do you not need experience or your own money, from the time you decide to pursue a multifamily investing strategy, from that time, when you say, I'm going to do this, you're going to be 1 to 3 years away from replacing your income. And it's all because of this curious law of the first deal. Let me talk about the curious law of the first deal. I've interviewed dozens, hundreds of successful real estate investors on my podcast who are either financially free or almost there. And I noticed their path followed a very specific and consistent pattern. It went like this. The first deal was the smallest. It was the hardest to do, and it took the longest. The second and third deal followed in rapid, almost automatic succession. By the third deal, they had replaced their income. It didn't matter how big the first deal was. And then they achieved financial freedom within 1 to 3 years from the point of when they decided they were going to go after apartment building. Now, this pattern is so consistent, I call this phenomenon the law of the first deal. I talk about it all the time. And it can be stated like this. The first multifamily deal of any size results in financial freedom within 3 to 5 years. Let me say that again. The first multifamily deal of any size, and that includes a duplex, by the way, results in financial freedom within 1 to 3 years. And that's how powerful that first multifamily deal is. Don't believe me? Take a look at these entrepreneurs who have replaced their income with apartment buildings in under 3 years. I'll let Tasha tell a story about how he replaced his income with passive apartment building in less than 2 years after he decided to pursue a multifamily investing strategy. Now, you remember the beginning of Brad's story, right? I talked about that earlier. Planned to buy 10 single family house rentals and then replace his income in 10 years. But actually ended up buying 5 rentals over 5 years. So Brad picks up the story from where he left off. I had heard about multifamily and started to look into it in early 2015. I got some training, read some books, and started analyzing deals and making offers. I didn't have any previous apartment experience and I didn't feel like I was ready, but I just did it anyway. About 8 months later, I had my first deal under contract. That's 8 months after that point. And it was a 12-unit in Monroe, Michigan, about an hour from where I live. For the down payment, I made an early withdrawal from my IRA and used a bank loan for the rest. Almost 6 months after closing on that deal, I purchased a 12-unit next door with a partner. So 8 months, 6 months. 4 months after that second deal, I closed on a 63-unit with a different partner. And after that, I covered my living expenses with passive income from the apartment building just under 2 years after I decided to pursue multifamily and I quit my job. My life has been so much better since I left my full-time job. I'm able to get more sleep, exercise more, and do all sorts of things that I have been putting off on the back burner because I didn't have enough time. Most importantly, I've been able to spend a lot more time with my family. My relationship with my wife and kids has improved dramatically. I find that I'm able to think more strategically about life. Since replacing my income, I have not stopped investing in apartment buildings because I enjoy the activity, and it's a great way to build generational wealth. I bought a 23-unit with another partner, I syndicated a 50-unit deal, and today I control over 160 units and I don't plan on stopping. That first deal was like a giant domino for me. It was the hardest to do, and of all the deals, it took the longest. I didn't really know what I was doing, and I didn't have a track record. I had to overcome a lot of obstacles. But that first deal enabled the financial freedom I have now. And once I did that first deal, the second and third came almost automatically and kept getting bigger. In less than 2 years from when I started investing in multifamily apartments, I had covered my living expenses through passive income. I'm excited about helping other people become financially free like me. That's why I joined Michael's program as a coach and mentor, so I can help students do their first deal. I know that once they do that first deal, the second and third deals follow quickly, and they will have replaced their income as well. That's what I'm excited about. So another example is Drew Niffen, and he remembers his journey from W-2 job to retirement in just 12 months after deciding to get started with apartment building. I became the excellent landlord, and because I couldn't sell my condo, and so I rented it out. I didn't do anything with real estate for 5 years until I realized I didn't want to work for the rest of my life. I decided to pursue real estate, and guess what? That's right, I started with single family houses. I bought a rental house out of foreclosure. I then realized it would take way too long to quit my job. I decided to pursue multifamily investing. I purchased Michael's program and began to analyze deals and make offers. 3 months later, he closed his first apartment building deal, and it was a small one. It was a 3-unit in Minneapolis, and he had 2 partners to buy this 3-unit building. And so I rehabbed the property and later refinanced to fund some of my deals later in the year. And then the deals and the money kept coming. A month later, I bought a 4-plex with a partner. 2 months later, I bought a 32-unit property with 2 partners. Half the down payment was from the refinance of the 3-unit I bought earlier in the year. I stopped working my W-2 job 12 months after deciding I would pursue multifamily investing. And since then, I've done 7 additional deals, and now I own 295 units in total. I just did a 62-unit deal and syndicated a 170-unit deal. Syndication is such a rush. The sky is the limit. And quick update on Drew Niffen. He is now president of our investing company, Nighthawk Equity, and he controls over 2,000 units. And that 171 unit that he bought with a partner, his share of the equity right now is 1.4 million. So it is outstanding. He says that first deal is so critical. It's like riding a bike. It takes some effort at first to learn the skill, but once you have it, you can go so much further than you ever could before. The first deal was the hardest, even though it was small, and the second and third deal happened almost automatically. It's all about the first deal. So right. My life today would have been hard to imagine just 2 years ago. I can play with my daughter in the middle of the afternoon. I can go on trips without having to get permission from a boss. My outlook on my life and my plans are changing almost daily because I don't have to worry about working. The freedom for investing in apartment buildings has changed my life so radically that it's hard to explain. All I know for now is that I want to help other people do the same thing I have done, and I believe that apartment building is the best way to do that. That's why I joined Michael's coaching staff, so that I could help as many people as possible do their first deal. In fact, he was actually one of our first mentors when we first started our program. And like I said, today he's heading up our investment company. Tyler Sheff covers his living expenses in just 11 months. All right, so like so many people seeking financial freedom with real estate, Tyler Sheff started by flipping houses. And he was actually pretty good at it. The problem was that he lived large and didn't account for the tax bill, which was so big that he was forced to get a job. So after several years of working for the government as a merchant mariner, he went from a 5-figure to a 6-figure income, but again, he was paying a ton of taxes. He also realized that he was missing his wife and 2 young kids because he was deployed for weeks and months on end. Something had to change, and soon. There was no way he could keep doing what he was doing. So his solution to the taxation and time problems was real estate. Together with his wife, they decided that this time around, he calls it Act 2, it would be buy and hold real estate. And it would not be single family houses, but small apartment buildings, because he didn't think he could cover his living expenses fast enough with single family houses. So with that decision, Tyler took massive action. He took a 6-month leave of absence from the government with the goal of covering his living expenses with apartment buildings. The first thing he did was to apply the Dave Ramsey method of eliminating debt and reducing expenses. He then found a half-vacant 4-unit building and decided to use his VA loan to purchase it, with no money down, of course. He renovated the 2 vacant units and then moved his young family into one of them while he rented out the other 3. He says he was clearing about $700 per month while living there for free. And then he discovered vacation rentals and was able to increase cash flow to $4,000 per month while his family still lived there. He knew he could only use his VA loan once, but he didn't have any cash to buy more apartment buildings. So he decided he would try to raise money from others. He attended a money-raising seminar and came back armed and dangerous. He took his 1-deal track record and started searching for buildings in Memphis. And in rapid succession, as it always goes, the law of the first deal, he found 2 buildings, a 10-unit and a 12-unit, and he bought them with the help of his new investors. So he was living for free in the 4-plex, and he had substantially reduced his living expenses, and he had passive income coming in from 26 units, all with zero money out of his pocket. Nevertheless, he was nervous about cutting the cord with his W-2 job. He was thinking to himself, what if he just got lucky? What if things went wrong? So after some time, he overcame his doubts and fears and decided to quit his job to focus full-time on investing. It elapsed time, precisely 11 months from the time he started his leave of absence. And that, my friends, is the power of the first deal. Because once Tyler did his first deal, the second and third followed in rapid, almost automatic succession, and he was able to cover his living expenses in just 11 months from the time he got started. And once he was no longer working full-time, Tyler was able to think about what else there is to do besides working all day, every day. And today, he's educating people about passive income from real estate through his Cash Flow Guys podcast and online material. all because of the law of the first deal. It took JB 2 years to buy his first duplex, but then this happened. So JB initially began looking into real estate to provide security for his family in case something happened to his job and to reduce his W-2 taxes. He's got 5 kids and wanted to be a good mentor to them. He wanted to show them that they don't have to be stuck in a commuting job for 30 years like he was. He wanted to teach them how to be entrepreneurs, property owners, and to be the bank. One of his daughters has a learning disability and he needed a way to provide for her long term. He also wanted to travel more. The more he researched real estate, the more he came to the conclusion that multifamily was the way to go. But he wanted to start small. So he looked into duplexes, a lot of duplexes. He says that he looked at about 200 duplexes over 2 years before he finally pulled the trigger. Oh my gosh, right? He just wanted to be sure and he had to overcome a lot of anxiety. So he self-managed that duplex for a while, but then realized he didn't want to be in the management business. He needed to purchase larger buildings in order to have a professional management company do everything for him. His main problem was lack of capital, and so he started to talk with friends and family about investing with him. By the time he closed on the duplex, he had an off-market 36-unit deal in Phoenix under contract. It was mismanaged and was breaking even. He hired a professional manager and began increasing that income so that he could refinance and repay his investors. Jay is a perfect example of the power of the first deal. It took him 2 years to do his first deal, and then it was only duplex. But then an interesting thing happened. The second deal followed in rapid, almost automatic succession. And I'm sure Jay will do his third deal in just a few months, and then he'll be out of the rat race forever. This is the power of the law of the first deal in action. So this is a story of Brooks Everline, okay? He's a UPS driver during the day, and he decided he didn't want to do that for the rest of his life. And he was looking for a way out. So after exploring various options, he decided that multifamily investing would be the way to go. But with his limited resources, he knew he had to start small. So he decided to look for small apartment buildings. He educated himself and then started to look for deals. And then he finally purchased a vacant fourplex in Hagerstown, Maryland with a hard money loan, fixed it up and filled it with tenants. The building cash flowed $800 per month. He then refinanced it to repay the hard money lender. Within 3 months, he closed on a second deal, 3 months. Second deal, a 5-unit building that now cash flows $1,000 per month. How much does he need to quit his job? He needs $4,000 a month, okay? So he's about halfway there, and he's close to getting a 10-unit under contract. He's very confident that he'll be able to quit his job and become a full-time investor within the next 12 months. Do you see how important that first deal is? Even if it's only a duplex or a quad? All right, now before I tell you how Bruce earned $40,000 per month in passive income in 2 years, hit that subscribe button and notification bell so you won't miss any more content like this. So shortly after deciding he wanted to replace his income from his financial management job, Bruce Frazier completed my training program. 3 months later, he had his first deal under contract, 138 unit in the Dallas-Fort Worth area. It took him nearly 6 months to close that deal, but once he did, it gave him $8,000 a month in passive income. 3 months later, he had 110 unit under contract and closed it 3 months later. That added $4,000 a month to his income. 6 months after that, he closed his third deal, an 80-unit deal, not so far from his first deal, which now replaced his income from his previous job. Total elapsed time, 2 years from the time he decided to pursue apartment buildings. All right, this next one is a story of Joseph Goslin. He's an Israeli immigrant, and he replaced his income in under 3 years. So Joseph Goslin's story defines the word grit. Once he decided that multifamily was the route he wanted to take, Joseph continued to drive through every challenge, getting creative and doing whatever it took to secure his first deal. Despite the roadblocks and frustrations in his path, 2.5 years later, he's done 2 apartment buildings totaling 124 units, and he has 5 properties in the pipeline. Joseph's living expenses were covered, and he transitioned into full-time real estate. Joseph got his start in real estate back in 2005 when he and his new wife realized that their new 5-bedroom home was too big for just the 2 of them, so they chose to stay in an apartment and rent the property. 2 years later, they moved to the United States from Israel and recognized the opportunity provided by the market collapse. The Goslins secured their real estate licenses and began actively hunting for deals, purchasing a duplex and several single-family homes. Now, he was struggling with his duplex, though, having to write a series of checks totaling $40,000 to repair foundation issues that he discovered after closing. Ouch. In addition to wiping out any cash flow, he realized that he couldn't scale single-family homes quickly enough, and something had to change. Several weeks of researching multifamily investing, he decided to shift his strategy. His enthusiasm quickly subsided when he discovered that brokers weren't returning his phone calls. Joseph persisted and decided to source deals himself by sending out letters and postcards directly to apartment owners. After many months of frustration, he built rapport with the owner of a 22-unit apartment building who agreed to sell the building with seller financing. He closed on the property 2 long years after having decided to pursue multifamily investing. The duplex had grown in value over the years, and he was able to refinance it to afford a down payment. He hired a professional management company, and over the next year, he was able to increase the value of the building by $600,000. Within just 6 months, he closed on a 102-unit property. After closing the first deal, everything became easier. After learning that Joseph was a closer, brokers returned his phone calls. Investors were eager to talk with him. He had his team in place, and he was familiar with rent levels and expenses. So when his property management company told him about this off-market deal, he was able to act on it quickly. In 45 very stressful days, he managed to raise $1.4 million from investors. When I interviewed him in podcast 78, he was already on a contract for a 28-unit and was working on 5 other off-market deals. Together with the first deal, the 102-unit property was enough to cover Joseph's living expenses about 2.5 years after getting started with apartment buildings. Financial freedom, and all because of the law of the first deal. So Gary Keller wrote an excellent book called The One Thing that I highly recommend you read, and he suggests that the key to achieving your strategic goals is to focus on one thing. The key question to ask to determine that one thing is this: what is the one thing that if you could achieve it would make everything else easier or even unnecessary? Okay, so that's the one thing. Now with regards to becoming financially free with real estate, the one thing is clearly and undoubtedly what class? Right? Your first deal. That's the one thing. That's it. If you remember nothing else from this video series at all, then remember this one thing. Focus on your first deal. Nothing else matters. Forget everything else for just a minute. Focus only on your first deal. Do whatever it takes to do that first deal. That's how important that is. And that's why this video series and all of my content and programs are focused on getting that first deal done. Because I know that if I can help you do that first deal, you will be financially free in the next 1 to 3 years. Because I know that's the power of the law of the first deal. Happens all the time. Now you're probably thinking to yourself, that's great, Michael, but I don't have the capital or experience to do what these people did, and certainly not in that time frame. Now I thought the same thing too until I experienced the law of the first deal myself and started to study it. So in the next video, I'm going to reveal the 4 secrets to doing your first deal. Once you know those 4 secrets, there's nothing that will stop you from doing your first deal. Nothing, okay? So hit that subscribe button and notification bell so you don't miss the next video where I cover the 4 secrets of the successful apartment building investor. Let me know your thoughts or questions in the comments below, and I'll see you in the next video.